in a lot of cases, it's going to be displayed on our credit. And so, yes, they are pulling credit.
Okay.
Now, I hear you out there. No. I heard this dude on Instagram or TikTok say that I could get a business loan of $250,000 without running my personal credit. And you can. But let me tell you this. On my car, it says 160 miles an hour. I can probably go 160 miles an hour, but I believe a couple of things would happen. That car might blow up. I might get an accident. I'm probably going to get stopped and go to jail. So just because you hear certain things does not mean it's best for you.
Hey gang, this is Mike Headley. We are back. Another great episode on the Headley Group Real Estate Show. Listen, we've been going a little bit. Right? We had to take care of a few things and get some great guests on. Actually, really screen the guests and make sure that they are giving value. We got a brother right here who, when you need the money, he the one to call. Mr. Corey Barber with Barber Companies, specialize in the financing piece. Great consultant. And again, like I say, you need the money. He's the person to call. He's going to tap in and give us some great insight. So, Mr. Corey Barber, welcome to the show, brother. Thank you.
Man, we're glad that you're back. We missed you, brother, but we know that you had to go handle business. So welcome back.
That's right. That's right, man. Well, again, thank you for jumping on the show and, again, providing our audience some insight on just how to just get to the money. Because in the day, we look at different asset classes and we like,
Right.
How do we finance this? A lot of times the traditional bank may not be the route. And I take it that's when a person like you come in.
Yeah, that's absolutely it, man. So, a little bit about my background. We really, Barber Companies, we have a P3 format, right? Just to provide clarity. One of the P's, we prepare businesses and entrepreneurs to be able to access the capital that they need to grow, scale, and sustain their businesses. Mm-hmm. The preparation piece, Mike, is the biggest piece. And all too often in my 20 plus years of actually being a vice president of commercial banking, I saw too many of us come and not be prepared. So one of the things that we do is we prepare. Number two, we can provide lending anywhere in the country other than California. Okay. Anywhere from $100,000 upwards to about $15 million in commercial and small business loans. And then our last P is what we're doing today, brother. We are partnering. We partner with different entities, whether it be colleges, universities, different businesses to be able to service and educate. And so by doing that, my hope is that we can get capital in the hands of the right businesses, because that's how we decrease the wealth gap. All too often we see us not being able to access the money we need. We have great businesses. We're very savvy. We're hustlers. We know how to do it, but we just simply run out of gas. And so our philosophy is to put money in the hands of businesses and people that can run with it and do well.
Well, you make a great point. I think a lot of times with our people, so to speak, like I said, ideas is there, and the momentum and the drive and passion is there. But then it's like, okay, you said, man, I need some extra money, or I didn't really input or equate this to say it costs this dollar amount. My ideas was this big, but it costs that much to really get things up and running.
Yeah.
How? Okay, so walk me through. We're gonna talk to me to like a 2-year-old.
Yes, sir.
We're gonna break it down.
Yes, sir.
I'm interested in buying business A, right? And I want to transform it to whatever that looks like, but I need capital. What exactly do I need to qualify to make this business work from you all?
So there's a couple things that we want to start with. And again, we like to always give framework. Now, this is not everything, because we probably don't have time today to give everything, but I'll give enough to get started. And we call it our C3 method. Here's what institutions are going to be looking at, financial institutions and banks, to give you the money to buy that business. So number one, they're going to be looking at character.
Okay.
Right. character of Corey Barber, character of Mike, because character is going to be displayed in, here we go. In a lot of cases, it's going to be displayed on our credit. And so, yes, they are pulling credit.
Okay.
Now, I hear you out there. No. I heard this dude on Instagram or TikTok say that I could get a business loan of $250,000 without running my personal credit. And you can. But let me tell you this. On my car, it says 160 miles an hour. I can probably go 160 miles an hour, but I believe a couple of things would happen. That car might blow up. I might get an accident. I'm probably going to get stopped and go to jail. So just because you hear certain things does not mean it's best for you. So number one, character. We want to make sure that your credit is at the best possible place it can possibly be. Your credit is like your children. It constantly needs to be monitored. You constantly have, and it doesn't have to be perfect, but it's a piece of the pie. So your character is displayed by your credit, because typically my credit shows the decisions that I've made in the past in managing me, which will give them a peek into how they'll manage their business. Mm-hmm. In addition to your character, personal financial statements are going to come into play. You're going to need to be able to list your assets, your liabilities, because what they want to see is Corey over leveraged? Does he have $1.3 million in assets, but $2.3 million in liabilities? We have seen recently in the news several people that are over leveraged. Okay. From former government officials to football players that say, okay, I made $88 million, but now I have $50,000 in the bank, but $3 million in debt. And so they're going to ask for that. So character. Number two, capacity. What is capacity? Capacity is the ability to service and handle that debt. So if Corey is looking at buying another franchise and the debt is $800,000, but the revenue that I'm currently producing is at a break even. All right, let me break that down. If I currently make $12,000 a month, and when you look at my liabilities, it's $11,900. I have $100 extra. That $100 cannot service that new proposed debt. And so the capacity, in essence, is just like Mike and I go to the gym, and Mike has the capacity to lift 400 pounds because he's been working out. Y'all see how buff he is. You see him in his t-shirt. where I have the capacity to only lift 200 pounds. Right? And so capacity is critical. And then the last C is going to be cash flow. What cash flow do you have to handle that debt? I know a lot of our business, I know a lot of us are dreamers, but the numbers tell the story. And so again, if my business is making $12,000 a month, and once all my bills are paid, I have $100 left, I don't have the cash flow. Compared to my business makes $12,000 a month, it's an $8,000 break even. So I have $4,000 to service a new debt. That new debt proposes only $2,000. The institution will feel comfortable with that. So that's our C3 method to start. There's more to it. Maybe we can talk offline, but that's a good starting place.
No, that's you answered that real thoroughly. And again, I guess your background is being in the commercial financing space that plays a role.
Absolutely.
How does is there now? Do you let the buyers? Do they have to be a personal guarantee on the loan, or
that's a good question. So here it is, Mike, and I love that you asked that because we hear that very often. Non-recourse, no personal guarantee. So let's put it like this. For all those that are listening, typically when you ask for money, it is maybe your first time meeting a person. And so again, please hear my heart. This is 2 decades of experience being the banker that you're talking to. All too often, people would come in and say, hey, Corey, I need $1 million. And I equate it to saying, when I first met my wife, the very first time, asking her what her ring size was. It is a bit too much too fast. Let's take it a step further. Let's say I come to Mike and I say, Mike, I need $1 million to buy this piece of property, but I don't want to personally guarantee it, Mike. I don't want nothing. So Mike is going to be like, I don't know if y'all know this. Mike is from Brooklyn. Mike is going to be like, word? You don't want any skin in the game. So let me get this straight. You want me to assume all of the risk and you not have any personal. So there are situations where you can do that, but here's what happens. The less you provide, the higher the interest rate is going to be.
Correct.
The more risky the deal is.
Mm-hmm.
Now, a lot of our listeners are going to be very successful, and there will come a day where you won't have to personally guarantee.
Mm-hmm.
But a lot of the listeners are going to have to personally guarantee if you want a better rate. And
Mm-hmm.
so when we start talking about business lending and commercial lending, it is all about rate, because that rate determines cash flow. So to answer that question, you can, but it's probably not good for you. In
Mm-hmm.
addition to that, depending on what most lenders that you talk to that are going to offer you the premium money,
Mm-hmm.
that's going to be a red flag. Because again, I asked Mike for money, but I'm like, hey, I don't want to personally guarantee it, bro. That immediately kind of raises a red flag. So
Interesting. So let me push back on that a little bit. What if it was, hey, I don't want to personally guarantee it because I want my business to develop that credit and that reputation so it can float on its own versus me putting my own
man,
Social Security number up.
that's a beautiful pushback. And so here's what a typical bank is gonna gonna say or look at it this way. And again, I want to give context. It's not about me, but you do need to know about me. This is 20 plus years working for 3 large institutions
Mm-hmm.
of lending money, clicking buttons, moving millions of dollars.
Mm-hmm.
And so they understand that. But in addition to that, so historically speaking, we had a time in the early 2000s where that was being done. And as a result, the banks got pummeled because there were no personal guarantees, so they had no recourse.
Mm-hmm.
And so
Got
as a result of that, they started making sure that everyone personally guarantees their debt,
it.
because if something was to happen, the banks want recourse. They want to be able to personally go and get my house and get. And
Mm-hmm.
so, yes, that is a great reason. But what they do is they look at you globally. It's called a global cash flow.
Okay,
They
global.
look at you personally and they look at your business. And yes, your business will continue, but they also want to know that you have the ability to secure that debt also. And so there are certain levels where you can do that. And
Mm-hmm.
there's certain options where you can do that. I just want to make sure that people are aware is that the less you provide, the more risky it looks to the institution, to the lender.
Mm-hmm.
And how they mitigate risk is they increase rates.
Increased
And
rates.
and there's some deals where, hey, you want to we got a client right now that needed, $1.5 million real quick for 60 days because a deal fell through and he needed to pull cash, and he's pulling cash out of another property and so his stuff is quick and clean and he doesn't want to. That's fine. There are
Mm-hmm.
cases where it's beneficial, but for most of us, the further you get away from documentation,
Mm.
the more unfavorable the terms and the rate are.
That goes with what I'm thinking about as you said. No documentation, no doc loans they was doing during the financial
There we
crisis,
go.
and they
Yeah.
didn't. No, you don't got to be no tax returns, nothing. Just fill out the application, but that
Well,
rate can be 8.9,
yeah,
10%, etc. So yeah,
that's a
that
great point.
clarified that, and I didn't know anything about the global cash flow. That's some good insight there.
Yeah.
Okay, let's transition a little bit in terms of a person is interested in possibly getting into the field that you're getting into, right?
Okay.
What does that look like, or did you fall upon that, or is there a career in that?
Yeah. So a little bit about my background, man. I'm a country boy preacher's kid from a place called Goldsboro, North Carolina.
Mm-hmm.
My mother was an educator, and I was a kid that was a pretty decent student. And I could dunk on a couple people.
Oh, okay,
And
okay.
so I went to I graduated from Fayetteville State with a degree in business. I always had an entrepreneurial man. Back in my day, and you remember this, we didn't have cell phones and long distance on our phones. So you had to use, for those that are watching, you had to use something called a calling card. And so I sold calling cards in college.
Okay.
You remember? And so fast forward, I got into banking
Mm-hmm.
and had a appetite for business clients and commercial clients, and got into the business side. Got into lending. A big part of business banking is not just deposits, but more importantly, lending. And so there's a pathway to it. 6 years ago, we founded Barber Company because we found that a lot of financial institutions didn't have the ability to service clients. I had a client come to me, Mike, that looks like us, and said, "Hey, we need $2 million to build a facility. Corey, we don't know how to start, what to do. Can you hold our hand? And that's how we founded Barber Companies, because again, in a lot of cases, and this is historical data, in a lot of cases, we have been literally locked out of capital, from GI Bills to the great expansion of the West to more recently PPP loans. The first round of PPP loans was not administered to us, and some of that is systematic, but some of that we can learn and better position ourselves. And so, for anybody that's interested, I would say, one, continue to educate yourself. Two, get a mentor, and get that. That will help you get clarity and speed.
I like that. What's your take on? We hear so much about. This is all around us from different podcasts, different books, YouTube videos in terms of financial literacy. Right?
Yeah.
It can be, I think, an overconsumption of information that after a while you don't know which way to go.
Yeah.
And unfortunately, we do have a lot of people that's misleading people. So you can swipe up and buy their course of their book, which is another topic. What do you say to us in terms of, is there a particular book, a particular video, or something that can increase our financial literacy so we can have, like you mentioned a second ago, that skill set and that knowledge so we are able to make the best sound decisions for our future?
Yeah. So one, when talking to us, I want us to realize how amazing we are and how we've been able to cover so much ground so quick. Mike, here's what I mean. There was a time in this country where we were not legally able to read. So you talk about literacy, like legally we couldn't read. And in a very short period of time, we drastically decreased our literacy rate. And so now that we're literate and we have access to information, I say gobble as much as you can and weigh it, right? If it doesn't feel right, if it doesn't sound right, right? Let me give you an example. Business owners, hey, do you need business capital? We can get you $250,000 in the next 60 days at 0% interest. Now think about that. $250,000, 0% interest. Most businesses don't need that.
Correct.
You got to ask yourself, well, what happens after the 0% interest? 29%.
Oh, gee, credit cards. Geez.
Right. And so consume the information and weigh it. I'm not here. My responsibility is to provide information to people where they can make a good decision. That's what we do with our clients. We want to educate you with the right information to get the right result. And then, Mike, we want to give you strategy, because strategy is what we execute on. And so with the internet and access to information, man, listen to it all, weigh it, get some people that you feel comfortable with that have done it and say, okay, I know you bought commercial property. Tell me about your experience. Like, let's get back to being inquisitive and asking questions.
I like that.
Yeah.
That's real. Yeah, and I would use that myself in terms of, well, just piggyback on your answer is just so much information, but again, you take it all in and I call it like a sifter. You sift it through what's good because what's good for me may not be good for Corey and what he's trying to accomplish in his future.
Yeah.
Some of the projects, walk us through a deal that was a rough one, but you end up pulling it through for that particular client. Because a lot of times we like to hear examples, you know.
Yeah. So we had a client that, this is a multi-unit deal. And so the reason why I bring up a multi-unit, somebody might say, well, Corey, you said you do business and commercial. Well, what you got to realize is once you get past a certain number of units, it shifts to the commercial side, right? So those of you that are listening that have multiple properties, you keep buying properties, the bank is going to say, hey, congratulations, we now have to shift you to a commercial, the commercial side because your portfolio has got so large. So we had a client that was looking at buying a 16-unit piece of property, and the challenge was the numbers weren't panning out, right? What we find in this market sometimes is people want a certain amount of money, but the property can't cover that. Let me give you an example. So let's say, for instance, Mike was selling me a piece of property for $1 million. And once I got my estimated payment is $12,000, However, when we look at the lease agreements on the property, the lease agreements are only $8,000. So the property can't cover the new proposed debt. So we got a couple options. We can walk away from the deal. We can say, okay, we're going to increase the rent, those 16 units. We're going to increase the rent to cash flow. Or, hey, Mike, we're going to ask you to reduce the rate. Reduce the asking price.
Correct.
So in this case, a couple things happen. Number one, they reduced the price. Number two, the seller did what's called seller financing because there was a little bit of a shortfall to the down payment that the buyer had. So he didn't want to be in a situation where this was $1.6 million. 10% down is a lot. 5% down was a lot.
Correct.
And so we were able to, get the numbers to where it globally cash flow and the debt service cash flow ratio was ideal. We don't have time for that. Correct. But these are things that you need to know if you're buying commercial real estate. And two, we were able to get the seller to seller finance some of the down payment. And we just kind of worked through it. And long story short, he bought the property, had it for a year, increased the rent. And this guy, last thing I heard, he sold the property and probably made about $700,000.
Nice.
Yeah.
Well,
that's great. But I can't look y'all in the eye, those that are listening, and say that every deal works that way, because it doesn't. There's a whole lot of declines also. So that's another thing, Mike. When the person is talking doesn't show you the other side of the coin.
Oh yeah.
Boy, that's not realistic. That's not the world we live in. You need the pros and the cons, the good and the bad.
That's like I said, I'm speechless like that, because that is so true. You got to always have both sides, because people just.
Hey, look, I don't know if he was from Brooklyn, but he said sunshine and the rain, joy and pain.
That's right. Oh, we talking about Rob Bass? Yeah,
Rob Bass. Yes, sir.
Yeah, got you. Yeah, joy and pain. Actually, is one of the first concerts I've ever been to.
Oh yeah, okay.
So financing piece, yeah, we definitely touched on you, and you gave me, a great example. And you said you're licensed everywhere but Florida. Is that correct?
Yeah. But however, so it's kind of like two doors. A big part of what our business does is consulting.
Okay.
And so we consult all over the country, and we've got one international client. But when it comes to the lending piece, because this is how people come to us, they say, okay, Corey, man, we need to get prepared, right? I've been running a business for 10 years. I've got to buy this home healthcare facility for $800,000, but I've never borrowed money. Help us get prepared. Or that client says, we're ready. I need $800,000 right now. And so the consulting side, we can consult anywhere. The lending side in the state of North Carolina, in the country, we do everywhere but California. And for my Canadians that are listening, we can lend working capital in Canada.
Okay, working capital. Okay. So, and again, I know you spoke on it, but I want to make sure I heard it correctly. Person A comes to you, and again, a lot depends on their portfolio, right? The debt income ratio, credit score, and all that good stuff. And what is the maybe one or two or three things that definitely they must have if they want to qualify for $500,000 and up? Is there like a minimum minimum itemization they may need, or what does that look like?
Yeah. So number one of the things that we got to get clear on, and I love the questions you're asking, and I want people to hear this, because if people aren't answering your questions this way, they're not asking enough questions.
Correct.
So number one, we've got to figure out, what is that $500,000 for?
Correct.
Right. So number one, if someone says, okay, Corey, the $500,000 is for a piece of property that I'm going to be in the business. I'm going to run my business out of this property. Oh, we're talking owner occupied properties. Cool. Well, that's a different way of looking at it, because again, being that it's collateralized, banks feel more comfortable with collateral. Why? Because again, they can recoup their money. If Corey gets in a piece of property that has a $500,000 loan, but it just so happens it's worth $650,000, if they have to foreclose or take that property back, they'll be made whole.
Correct.
Compared to person A coming and saying, okay, Corey, I need $500,000 for my business. All right, tell me more. Well, Corey, I just got a contract with the airport in Greensboro, right? We're going to be putting in elevators over the next 3 years, and my contract is for $12 million. And so I have to scale up, but they pay me net 90, net 120. And so I have to wait 90 to 120 days to get my money. And my payroll is running $300,000-$400,000. We need money for that. And so, Mike, when we hear these numbers and we were asking questions, and viewers, I want you all to hear this. When you're asking questions and people quick to answer your question, they got to ask more questions. There's so many different variations and things when it comes to borrowing money. And as a result of that, it creates different options. So you need someone who can walk you through that process, because here it is, Mike. You could go out and get $500,000.
Correct.
So here it is. You feel great. You're praising your Lord, or whoever that is, and you got a new building. So you borrowed $500,000 and the interest rate was 13%. Hey, listen, the rate should have been 8%. The going rate is 8%. Why was your rate 13%? Now, if we did the numbers, that's at least $20,000 to $40,000 a year just based on your interest rate. Correct. So again, we are uninformed of what a rate should even be. So there's so many levels to that question. I hope I didn't jump around too much, but
you answered it correctly. Well, you explained it, whereas though as the audience, I got it. And again, you was to get it as well.
Yes, sir.
The strategy piece that you do, which I really, really like, because it's not like, hey, let me give you this money, but we want to actually, I think you take your time and dive deep in with the client to make sure that, okay, well, you may not need 500,000, you might just need 300,000. I take it, is it along them lines when you have your strategy calls?
Yeah, absolutely. So the strategy piece is the consulting side. So Mike, when we get to the place where we have educated you and you feel empowered to make a decision, now we want strategy. Now we want to say, okay, provide us with your credit, your profit and loss statement for the last quarter, 2 to 3 years of tax returns, because we're going to do what's called, in the banking world, we're going to spread your financials. And I want to talk through, number one, your numbers. I want to talk to you like a banker's going to talk to you. And I want you to be able to answer certain questions. And if you can't, I'll teach you how to answer them. Okay. It's called mitigation, because some of the stuff you're going to need to mitigate. And so in those type of sessions, that's when the strategy comes up. That's when they say, okay, well, we're looking at, 2020 and your income was down, but man, 2021, 2022, and 2023, that's when you can say, okay, well, my business was directly affected by COVID. And as a result, the state did this, this, and this. Here's how we've been able to rebound. So if you look at these numbers, and then if you look at our profit and loss statement from this year, you'll see. So that's the strategy in being really prepared to answer questions.
I like that.
And mitigate the risk and the concerns, because at the end of the day, I'm asking Mike for money. I want Mike to feel as comfortable as possible lending me money. And if I can't answer his questions and show him documentation, Brooklyn is out.
That's right. That's right. Well, and the thing is with that, if a client does not qualify, do you refer them to someone who probably can get it done, or you leave it alone?
So here's what happens. Again, we get a lot of clients that don't qualify because they want to know. I call myself a banker's buddy now, because in a lot of cases, here's what happens when you don't qualify for a loan. The bank says, hey, we can't do the deal. They give you a sheet of paper that says you're legally authorized to have a copy of your credit report, but you still don't know what to do to fix it.
Correct. So
you go back to your business and you're working in your business, and 2-3 years later, nothing has changed. So a lot of clients come to us on the consultative side that have been declined, and they say, man, teach me what I need to know. Help me fix this. Now, on the lending side, being that we're not a bank, right? So every bank has a box, every single bank. And being that we're not a specific bank, we work with about 150 different financial institutions. And so in a lot of cases, if we can't find the money for you, it's probably not time. Listen, Mike, there are some people that we just flat out say, this money is going to kill your business.
Okay.
Again, you're putting 445s on the end of the bar, and you can't even lift one yet. Your business doesn't have the capacity to handle this. And so if you find this money, it could possibly crush you. In addition to that, the rate is going to be so, the God that I serve, my wife and my children, man, I got to be able to look at them and do the right thing. And especially if we're talking about my people,
That's
because
right.
man, we've been done really bad when it comes to, financials. That's why we see in certain areas, that's why you see check cashes. I mean,
we started
so,
on that. Definitely.
Yeah, that's a whole nother conversation, man. We ain't got time for that.
You see all that bad stuff in our neighborhoods. But yeah, it's definitely another conversation. What Corey, is there a question or two that probably I didn't ask you that you would like to answer?
Man, you did a really good job of asking me questions, and I also want to thank you for giving me time to go in a lot of detail in reference to my hope is never to I always want to be a value add, and my hope is through this conversation of you asking questions, people had value.
Correct.
And so I try not to make it about me, but you gave me the time to explain context, and that's critical. And so I can't think of you asked me, how we do business, who we do business with, who's ideal. You asked me some really good particular questions that gave us the chance to kind of show people to walk through stuff.
Exactly.
And so you've done an excellent job, man. Thank you.
Well, you're welcome, brother. Listen, tell everybody where they can find you, websites and all that good stuff if they want to reach out to you, and how you can best serve them.
Yeah. So number one, I got a little gift for anyone listening, where we can provide them with like a checklist of like a readiness list for lending. And so if they text 844-519-1999, and in the text, just put Mike's name, and that'll trigger that they get a gift. Everybody that's listening to this. And in addition to that, my website is Barbour Companies, BARBOUR Companies. That's with an S on the end, .com. I'm on Facebook, social media. In addition to that, Mike, we have every month a free webinar conversation.
Nice.
To do just this, right? And that is on June the 25th at 8 p.m. Eastern Standard Time.
Okay.
That same number, 844-519-1999. If they text the word capital to that number, we'll send them out a registration, and they can just register for that. And I just want to be a resource and serve my community and help us to get access to our the money that we need, because, man, we just saw a court ruled down a fund that was allocating money to us when, mind you, private money, it was like 98% of the money goes to non-blacks. And so there are strategic efforts to keep money out of our hands.
That's right.
And I'll tell you why. Because when you fund your business, you make money faster. You hire more people, which in return helps you to minimize the wealth gap. When you buy property, you make money faster.
That's right.
You can utilize that equity in that property to send your babies to school or to invest in another company, right? And these are all historical things that we can see. We can see where man, listen, this year we saw lenders get called out as a result of declining the same credit profile for someone who is non-black.
Right, correct.
And so, man, this is 2024. In addition to that, if you get the money, there was something called redlining. So this is the first step, and this is my marketplace ministry. Again, based on what I did for 20 years, I'm able to be a resource because I push buttons, and I was in rooms advocating, and I know how things are played. And so I just want to serve and help, and I'm honored that you would take the time and have a conversation with me, brother.
But let me tell you something. Usually, like I said, I keep it real on the show. Usually I have to ask a million questions to kind of keep things flowing. I just 1 or 2 questions, and you ran with it, and you gave us some great insight. Thank you for that. Corey, every guest we have, and you gave us so many, we always ask for 2 golden nuggets, whether it's a book, scripture, a quote, something that gets Corey moving every day, or your little thing you like to share. What is it?
Yeah. So if we're specifically talking about entrepreneurs and businesses, one of the things that I love that my coach says is you can't build a business bigger than you build yourself. Now, I want you to hear what I said. I have a coach. I invest 5 figures a year in a coach for me. And
Nice.
so all too often we look at building a business, but that business has us in it. And so depending on our mindset, depending on how large or small we are, depends on how large or small our business is. And so I want to encourage everybody to focus on yourself first and foremost, because again, the bigger you get, the bigger your business can get. The smaller we are, the more unprepared we are, the lack of discipline we are, flows right into right into our businesses. In addition to that, there's safety in the multitude of counsel. And so I believe that today, Mike and I started a relationship that's counsel. Counsel today was having conversations where Mike is like, well, wait a minute, let me give you pushback. And that's when I say this, this, and this. And as a result, he doesn't have to make certain mistakes because there's safety in the multitude of counsel. That counsel gives you the ability to say, whoa, 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 don't do that. Or yes, that's a good. And so I want everybody to continue to build themselves, empower themselves. There are rights that we have that we need to operate in. In addition to that, I want you to find your tribe. And sometimes your tribe, you're going to have to pay them. I'm not going to disclose the number, but it is a very nice number where I could have a nice little sport coupe. But what he has given me, what my coach gives me, is it gives me speed and I don't have to make mistakes. Experience is a great teacher, but it costs a lot of money and it costs time. And so that's what I'll leave you with, because, again, I could go on and on and on, man.
No, that's some good stuff, bro. Like I said, I'm sitting here because, again, I can relate, and it resonates with me so much because I'm a firm believer in personal self-development and
yes, sir.
How accountability to yourself plays the ultimate role. Because if you can't help you, how are you going to help someone else? So that's the biggest thing, brother. But I'm saying, some brother, we got to do a part 2.
Yes, sir.
Part 2, and I want
tag team back again.
And like I said, we had technical difficulties, but we worked it out. I want to thank you, brother, for taking that time out, again, to letting our audience know and giving them that insight and concerning financial literacy and how you do business.
Absolutely. Thank you.
Corey, thank you for being on the show. And we're going to see you all next time at the Real Estate Show. Hey, gang, I hope you really enjoyed that show. Our guests provide us some great tips and insight, and please support them on all social media platforms. And while I'm saying that, support us on all social media platforms. And don't forget, watch the entire video on YouTube. We'll see you next time.